My name is Charles, and this is the Pirate Traders live stream. Welcome one, welcome all. We are focused on the ES and NQ and how it moves through the two-way auction process. The market is open, so we got to go. Actually, no. We can just chill this morning. Why do I feel like we can just chill this morning? Because the market is opening inside the previous day's range, after the overnight traded basically inside the previous day's range all night. So that tells us what we're going to get this morning is a chop zone where they will chop it up. What do I mean by a chop zone? That means there's a general range that the market is likely to stay stuck inside, at least for the first 30 minutes to hour of the day. Okay, so inside a chop zone, it's very, very hard to make guesses about what the market will do. It can go way up and then come all the way back down. It can just grind in a very tight area. It can go up and come down and go up and come down and go up. Anything can happen inside the chop zone. So I'm going to call that chop zone between about 55.07 and 55.34. Okay, the area that I have filled in here, that is the chop zone. So inside of there for the first hour today, it will likely be very tricky to figure out exactly where the market is going to go and exactly when it is going to flip and reverse and go the other way. So generally speaking, when the market opens inside the previous day's range, inside a chop zone like this, I just take it easy at the start of the day. No reason to force trades. No reason to feel like I have to jump into something right here, right now. And in particular today, there's an excellent reason for this. Okay, so I'm just going to take a second to zoom out and give us some context about what's been happening with the market. The market had a lot of excess. It made a very big move to the upside. In that process, it left behind what we call weakness. Okay, it left behind a poor low and two unfilled gaps. That is a lot of weakness. That is a reason that the market might need to pull back down and try to repair some of that weakness. Now, there's no guarantee that the market would have to get back to 53.85. Okay, it doesn't have to pull back that far, but to at least try to pull back in that direction, there is a decent probability because of that weakness that we left behind at the lows. Well, we also, surprise, left behind weakness at the highs. The all-time high was made in an overnight session. That makes it weak. And in my courses, I explain with more detail why that is. And we have a poor high that we left behind yesterday, which is also weakness. So we've got weakness on both sides of the market that is in need of repair. Okay? We also have what we call a market imbalance. Sometimes the market just can't go anywhere over a period of days, even weeks at a time. And it just goes up and down and up and down. Okay? That is a market that is in balance. There are different forms of balance. This is what we call balance by pin, which is basically just there's a specific level where every time the market tries to run away from it, boom, it gets pulled back again. And then it grinds and grinds. And it tries to run away and boom, it gets pulled back again. And it tries to run away and boom, it gets pulled back again. And again, and again, and again. Okay? So right now, the market is pinned to 55.30. That just means, it doesn't mean the market can't move away from the level. It just means as it does, it is likely to get pulled back to it. Okay, great. Charles, we hear you. We got weakness below. We got weakness above. We got a market that's pinned. And right now we're in a chop zone. So how do we trade it? What do we do with this information? Well, if we can break out of the chop zone to the upside, if we can push above the overnight high and find support, we can assume the market will try to get back to all-time highs to repair that weakness. So there will be excellent opportunities to make money on the long side above the overnight high, only after the market pushes above it and finds resistance there. Now, if the market pushes above the overnight high and finds support up there, if the market pushes above the overnight high and it can't find support up there, well, then we have an opportunity to go short for the market to come back down into the range and continue chopping around. Okay? It's the same thing with the chop zone lows, which is around yesterday's lows. If the market pushes below there and gets resistance, we have an excellent opportunity to go short to try to pull back and repair some of the weakness left behind to the downside. But if not, if we look below yesterday's low and pull back in, we have an opportunity to go long for more move to that pin. Okay? So that is why I say for the first hour today, I don't feel a need to force a trade because there is an excellent long opportunity with support above the overnight high. There's an excellent short opportunity with resistance below yesterday's low. And there's an excellent opportunity to go short if we get a look above and fail, or long if we get a look below and fail. Those are the good opportunities. Those are the high probability. One of those four things is going to happen today. Now, I don't know how long I'll have to sit and wait for the market to chop around sideways inside yesterday's range first. I have no idea. Maybe all day long. But if I wait and I'm patient and I don't force trades and I don't guess what's going to happen? When one of these opportunities presents themselves, I'll be ready to play. I won't be down. I won't be emotional. I'll be ready to go. And so that's the way I'm looking at the markets this morning. I see this as a chop zone, and I'm waiting for us to break out of the chop zone. Now, there's a lot more information I can take into account. I don't have to just wait for price to break one of those levels. I can look at tempo. How quickly is the market moving? How quickly are things changing? I can look at the volume. Where is the market getting support and resistance? I can look at the Bookmap. How is liquidity changing throughout the day? Are there a lot of icebergs? Are there a lot of stops in the market? All of these things can give me an understanding of what's happening, and I just need to wait until I understand what's happening before I enter trades. So I may get something inside the chop zone, but not right away. I need to wait for more information. Good morning to everyone in the chat. Please smash that thumbs up button. We are live on the public YouTube this morning, and we've only got 64 viewers. Those are terrible numbers. So I'm going to need all 64 of you to hit that like button so that we can get some more people up in here and get the party started, even though it will likely be a little boring this morning. Good morning to Nap, Laura, Scalp Demon, Willie T, Malang. Jason says Jay Powell is talking this morning and Jolts at 10 a.m. Well, that's even more reason for chop with the potential of a break one way or another. Good morning, Jay, Bill, RK. RK says the mic is low. It looks good on my levels. Crank up the volume on your PC. See if that makes a difference. Philip is here. Sid, good morning to you. Percy in the house. Sebastian is here. Ships, good morning. Grizzly Bull. Fly, good morning to you. One Punch Panda is here. John H. Hi, y'all. Stan, Frito, and Tony. Welcome, welcome. Frito says, good morning, people of YouTube. That's how I should start the stream. Good morning, people of YouTube. Both the people and the bots. Good morning to you. Novice Trader is here. All right, so we're pushing up into some resistance here. Obviously, this is where that pin has been for the market. That is the area where the market has been spending the most time and bringing in the most volume over the last week. We can see that both by looking at the cumulative volume over here, but even just looking at the daily profiles, right? Where are the big fat sections of volume and time? Again and again, they're all in the same area. Okay? So that is telling us that's where that pin is. That's where that market, and it's not support or resistance particularly. It's just like a magnet that every time price tries to push away from it, it gets pulled back again. So now that we're back at the pin, we can either try to break higher or doop, chop right back down. Let's see what happens. If you're new to the channel, this is your first time here, and you're wondering why no one's asking any questions in the chat, it's because they all hang out with me every day in the Pirate Traders Brigade. And so they kind of already know all the stuff I'm talking about. If you have any questions, please feel free to ask. Okay, pushing into resistance. This is an important area right here between 55.31 and 55.35. That should smack the market back down. If not, if we're able to get above that overnight high, that is a little bit bullish to see. Another behavior that we see quite frequently when the market is pinned is that the bots will use liquidity to force the market to do what they want it to do. They left all this liquidity sitting up here at 55.42 yesterday all day to stop the market from running away too far to the downside. That liquidity is still there this morning. So that also increases the odds that we're just going to go sideways in here, or get a look above and find support for a push higher. That decreases the odds that the market is going to make new lows today. I'm looking for resistance and a move to 25. Resistance and then make a move. Okay, so we're above the overnight high. That is a little bit bullish to see. One of two things will happen. We can either turn this into support, in which case we look to test 39 and continue higher, or we fail and pull back down. This is that first optimal point to look for an understanding of what could be happening today in the market. A look above and fail would be shortable to get back down to the half back at 25. Okay, that is a look above and fail. So that tells us we are still chopping this morning. We're still inside the chop zone. So now our question is, what happens at 55.25? If the market can find support there, it can take another poke at the highs. Okay? If not, if it passes right back through, more chop. I'm talking about a chop zone. We can tell that the market is still being, manipulated by the bots because of how they're using the liquidity above. You can see as price was moving higher, okay, what was the liquidity above doing? Let me just change colors here. What was the liquidity above doing as price was going up? They were piling in more and more and more liquidity above. So what they're trying to do there is they're trying to scare away price. They get it just above the overnight high, which is where traders who are longing will take profits, and where new traders will chase, FOMO traders will chase at the overnight high. They get it just right there and then pull it right back down. So the next question is, do we get support at 25? Good morning, Vu. Happy to see you. Fly says, can we do it all day? Where? Where can we find you? I don't stream all day. I just stream for the first hour every day. It is at piratrators.io. Sometimes I stream all day, but only when I'm, actively trading. Okay, so looking at the NQ here, the NQ is looking bullish. They have just broken out of the previous day's range, right as the ES is once again testing that chop zone high. So same as before. Two things can happen here. Either it becomes support on the NQ, that is 20.070. Either that becomes support and then we look for continuation higher, or we fail and pull back into the range. ES is still in that chop zone, but they are trying to break out. They can't quite do it, Captain. They don't have the power. So I'm now paying close attention to the tick chart down here in the lower right corner of the screen. This is the area that the market is trying to break out of. It's trying to bust away from here. If the ticks can stay green and keep pushing higher, they will be able to break higher. But if the ticks come failing back down below the zero line, price will follow. So I'm watching those ticks to see what's going to happen next. Good morning, 200 dogs. Still only 79 people here. YouTube is punishing me for taking a break. Please like and subscribe. Let's get this algorithm going. All right, so we got a poll going now. Do you think we're going to break out of this chop zone and head up to test yesterday's high, 55.40, or do you think we're going to fail and come back to test the halfback, 55.25. Which level do you think we're heading to first? Price action is saying it's going to be half back, but the ticks are saying breakout. I'd love to hear your opinion. And too late. Didn't even get the survey started. Well, of course, 85% of you are calling for 25 now. All right. Well, that poll didn't help us at all. Tony says, jolt in 10 minutes. Frito says, don't forget, jolt's at the top of the hour. Well, it'll jolt some volatility, but we don't know which direction. Jay, thank you for the heads up. I'll try to figure out what went wrong this afternoon. I did send out the email, but I sent it last minute. I'm no longer working from home. I'm working from an office space now, so I have to drive into the office. So the emails will go out a little bit last minute until I get used to these early mornings. Ah, I see. Okay. Yeah, that's just YouTube punishing me. It always does that. If you live stream on a regular basis and then you take a break, whenever you start live streaming again, it sends way less people your way. It's very annoying. Willie T, I'm in Wisconsin for a couple months until I decide which coast I'm moving to. Frito says you're in the chop zone of the USA. That has been the last month of my life. I've been in a USA chop zone. And honestly, it has felt that way. It was a crazy trip because it was like every morning we would leave one hotel. We'd drive to the next place. We'd check out the town. We'd get into another hotel. We'd have a couple hours to relax and we'd go to sleep. We'd get up. We'd do it again the next day. It was nonstop chop. If anybody saw my Twitter this morning, I said, 55.30 is the pin, and either we're going to break away today or probably next week. And my thought process of that is likely the option sellers don't want anything crazy to happen this week because of the holiday. If that is the case, we're going to stay pinned. And then we'll probably break away from that pin on Monday. But there is also a thing I've noticed sometimes is like, when I'm convinced that that's going to happen, when I'm convinced that we're going nowhere because of a holiday, like 2 days before it, the market will make some crazy move that I didn't expect. So that's my thesis for that call, is that we're either going to break away from 55.30 today, like dramatically break away, or it'll probably be Monday. Grizzly Bull says Tesla is pumping. Yeah, if I remember correctly, we were at an important resistance level yesterday. So did it break through? Oh, it broke through. Look at that. Yeah, we were sitting. This was the resistance right here yesterday at the market open. We were pushing up against that. They were able to break through throughout the day yesterday and then gap up this morning. Ladies and gentlemen, Tesla has momentum. You got essentially 2 full months of balance, and now you've got momentum. Man, this stock loves to make big gaps, doesn't it? So next major resistance for Tesla is going to be around 230, 231. We'll see how it handles that. Probably looks like it'll get there today. Crazy. Man, it looks like we're going to sit right on the pin until this news drops in 3 minutes. Then we should get some volatility. Come on, market. Give it to us. Kirk says, does the options market have as much influence as other markets like crude or the NQ? That is an interesting question. So everything is connected, right? That's the thing about economics. Everything is connected to everything else. So let's start with just like the S&P 500, right? You got 500 different companies. They're in all sorts of different fields, right? They do all sorts of different things. Some create goods, some create services, so on and so forth. Some of those companies need oil to do their business, right? Do they make things out of plastic? Do they ship things? Do they need to move things around? Well, then whatever's happening with oil is going to affect their success as a business, right? If oil prices go up, it's going to cost them more money to do business and vice versa, right? So absolutely, oil prices affect the individual companies within the S&P 500. So when oil prices change, it changes the values of those companies. As those companies' values change, the value of the S&P 500 changes, okay? Same thing with sort of looking at different indexes, right? There are stocks that are in the Nasdaq and in the Russell that are also in the S&P 500. So as you see the Nasdaq moving up or down, or the Russell moving up and down, it's going to have an effect on the S&P 500 as well. There are arbitrage bots that connect all those things together. So if somebody goes in and starts buying a bunch of tech, the S&P will move the equivalent amount that it should, and so on and so forth, okay? So that's all just macroeconomics and how the world is all interconnected. All right, so here's that news drop. And so the question becomes, Can the news break us out of this chop zone? If it doesn't, we're likely to keep chopping for a few hours here. So it's now or never for the market. That bounce on the halfback doesn't mean anything. That's not real support. So then what I'm talking about when I say the options market is something very, very different. Okay. The way options work is there are firms that sell options. So if you want to buy a call or you want to buy a put on anything, there's what's called a market maker who sells it to you. Those market makers are not speculating on what will happen in the market. They're not guessing the market is going to go up or down. What they do is they hedge against whatever happens. So they'll sell you a call and they'll sell someone else a put and they'll sell someone else a call. And then all of a sudden there's more risk to them if the market goes up than if the market goes down. So what they will do is they'll buy shares of the company, whatever company you're buying options in, right? So they start to buy shares in that company so that if the price goes up, they're protected from losses that they would have to take on the calls that they sold. Well, that creates this sort of choppy mechanism where the more speculators buy options, the more it affects the underlying asset. Well, nowadays, over the last 5 to 10 years, the market, a majority of the liquidity trading in the ES and the NQ is through the options market. And a lot of it is 0 day nowadays. So there's just a ton of hedging that happens that kind of forces the market to get stuck. That is what you're looking at with this pin. This is not indecision amongst humans of planet Earth. It's not that one day people thought the price was going to go up and then they thought it was going to go down and then they thought it was going to go up and then they thought it was going to go down and then they thought it was going to go up and people are just changing their mind every day, or indecision. People just can't decide, do they want to buy the market or not? That's not what's going on here. This is market makers who don't want the market to break higher or lower because they will lose more money if that happens. So they want to keep the market in a tight range because people bought calls that were way out of the money and people bought puts that were way out of the money. And so the market makers need the market to stay in a range for however long they do so that those options are no longer worth much that the speculators have bought. And that's what happens when a market gets pinned. Let's go back and see what's happening with the Q. Look above and fail yesterday's range. That's not good. That means we might be going sideways for a while. So they've got to turn 2076 into support, or this market's coming back down through the opening price. And if the NQ pulls back, so is the ES. And then we're going to be stuck in a chop zone for a while. And it's going to be a very boring day for commentating. So come on, bulls. Step it up. Let's switch over and take a look at ticks and see if those buyers can step in. Again, we're looking for those ticks to be moving higher. Novice Trader says Bookmap is behaving like it usually does during rollover. Yeah, I agree. It looks a little funky. It's very thin volume. It's usually much more spread out. It's like super thin volume and then just one random node of liquidity above and below. That is more of like the rollover look. Your guess is as good as mine as to why. Fly says, what does fair value gap mean? I don't know. That's not a term I use. To me, a gap is always just new business that took place after market close one day before market open the next. Unfortunately, every stock, when you're talking about individual companies, every stock kind of behaves its own way. So certain stocks, they almost always fill gaps. So if they get a gap up or a gap down, likely within the next few days, it'll come back and fill that gap. Other stocks, it doesn't. It leaves them behind. I believe with Tesla, it's quite common for them to leave the gaps behind. Yeah, so here you got a gap up. They never came back for until months later. Another one gap up they haven't come back for. This gap up they came back for, but not until, a week and a half later. So, if I was a Tesla trader, I would know, okay, Tesla often creates a gap and it continues the momentum. Created a gap, continued the momentum. Created a gap, continued the momentum. This one didn't work. Created a gap, continued the momentum, right? Created a gap, continued the momentum a little bit. Created a gap, continued the momentum. Created a gap, went sideways. Gap, momentum. Gap, momentum. So it looks like with Tesla, the momentum often continues. So I would be looking for a gap and go. I'd be looking for that momentum to continue to the upside. As I said, resistance around 30. See what happens there. DNK says, fair value gap is similar to single prints. It's an unfinished auction. Jay says, fair value gap consists of 3 candles. The gap is the price range that is shared by candles 1 and 3. Candle 2 is generally a larger candle, providing a wide price range. Interesting. Yeah, I mean, that type of stuff would never work on the ES, which is what I trade. There's too many mechanisms affecting price. Okay, so once again, we're poking above the overnight high, and we did leave behind a poor high, which means at some point today, the market will come back for it, but the ticks have not convinced me to get bullish yet. I still see this as a chop zone. Let's keep an eye on the NQ. Can they now turn yesterday's high into support? Can they hold it? That Sachs guy says, I trade 4-hour and daily fair value gaps with success on ES. Well, that Sachs guy, how come you never talked about it in the chat? We're supposed to be sharing ideas. Next time you see one, point it out. All right. Well, that chop zone is continuing. As we can see, those ticks could not hold the zero line. So what is the market telling us? They just tried to go higher and they couldn't do it. So they don't have the buyers just yet. So one of two things will either happen. We can now turn the half back into support and take another poke at it, or we fail, likely pulling back down through the lows and the chop continues. If the half back doesn't hold, we're likely to chop for hours here. And it will be a very boring day. And there it goes. All right, folks. Enjoy the chop. The market remains pinned. I assume the same thing happened on the NQ. Yes, sir. So that is a clear look above and fail. Second one today of the NQ, which is the exact same message as the ES. They tried to take the market higher, not once in the A period, but twice. They tried to take the market higher. Both times they ran out of buyers. So if you don't have buyers that are willing to pay these prices up here, you must put the market on sale to bring in discount shoppers. So the NQ likely to come back through the opening price and look for those discount shoppers around 19,950. It's a choppy meatball. I would not get bearish on the market. As I talked about earlier, this giant node of liquidity up here at 55.42 is going to stop the market from making any kind of large move to the downside. So I do think when we push down, we'll find support and come right back up. John says, I see Batman mask double top. Batman? Yes, well, I see Simpson. Do, 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 do. I guess it could be Batman. Obviously, I'm an excellent artist. Neri Bartman. Dude, nailed it. Tony says, just sent you an email about an options mapping tool. Very cool. I will definitely check that out. It's something I constantly try to wrap my mind around, and I'm just not there yet. So always interested in learning more. Chips, I'll check it out. Fly says, question, is 5522 support? The answer is yes, it could be, but I don't think it would be. So just, think about how the market has moved thus far today, right? The market opened down here. It immediately made a move up to where the pin is, where we currently are, 55.30, okay? Since then, it's done nothing but go sideways up here. So what you have is buyers stepping in and then taking profits. And then buyers stepping in and taking profits and stepping in and taking profits and stepping in and taking profits, right? And obviously sellers stepping in at the highs. So if the market comes back down through the halfback again, so let's say the market comes back down to where 22 is, you're going to start to cause anyone that's been buying basically since about 5 minutes into the day to panic, right? Those traders are going to start to panic. So in my mind, the more likely thing is the market would then liquidate back down through the opening price. And we'd be looking for support down here. Now, it hasn't happened yet, but one of two things is going to happen. Either we get above the overnight high and turn it into support, in which case we get bullish for continuation higher, or that liquidation will come because buyers won't keep buying all day long if they don't get anything for it, right? If the market can't actually break higher, each time it pulls down, there will be fewer and fewer buyers waiting. And so you'll have to liquidate. So right now it's just choppy and we just must wait. But as far as 22, it absolutely could be support, but I don't think so, just because of the amount of time and the amount of volume that we've spent above it. That is likely where buyers get liquidated. This is part of what makes chop so annoying, right? Because what the market is telling us is it needs a big pullback. It needs to squeeze all these buyers and give those discount shoppers a chance to get in before it can finally break away and go higher. But there just keeps being more short-term traders willing to step in and buy it. So we don't know how long it's going to have to keep playing this game before we finally get the liquidation. And so we must just be patient. And of course, the alternative, like I said, is if we can get above the overnight high and stay up there, well, then we can bring in new buyers up there that'll be chasing. But as long as we're in the middle, There's nothing to do but diddle. All right, we are public and we are losing people. They're getting bored. They're like, it's chopping. We want something to happen. So if you got any questions for me, hit me up. Happy to answer questions while the market grinds. Laura says 55.47 push. Totally possible if we can get above 35 and turn it into support. But I'm not convinced until then. Bri, it was good. It was a lot of fun. Thank you for asking. Grizzly Bull says, can we take a look at Bitcoin? Why not? Oh, the balance of all balance. Yeah, there's not much I can do with this TA-wise right now. So longer term, this is just one big balance area. Basically for the last 1, 2, 3, 4, 5 months. And so bigger picture, the idea is it will just keep going from one end to the other, from one end to the other, until it can finally break out of there, right? But inside of there, it can be very tricky to figure out, exactly when these things are going to happen. You would have to just wait for them to play out. Shorter term, you had a smaller balance area between 62,200 and 61. We'll say 6,100, 6,200. This area here, that was balance. Whoops. And so you have now broken out of that balance. And today you were coming back to back test it. So if this holds today, basically right where the market is now, if this holds as support today, you could look for continuation higher from here. Breakout, back test, continuation. Okay. If it fails and it pulls back in, you can look for move back down to 60 once again. But not much to do with this right now. All right, ticks are going for round number 3, trying to break above the overnight high. If they get smacked down once again, the market is set up for a liquidation. Can they hold it? One Punch Panda says, normally the longer the market has been chopping, once it picks a direction, the stronger the follow through of momentum. Kind of, yeah. So you think about it like a spring. that's being pulled back tighter and tighter and tighter, or like a jack in the box, being wound up and wound up and wound up. And the more you wind, the bigger the break. The tricky part is, though, particularly when a market is pinned, when it's being artificially held at a level, is when will that break happen, right? You might have been convinced on 624 that the market was ready to break lower. You might have been convinced on 628 that the market was ready to break higher. And so it's tough to know when it's going to finally break away. But yes, absolutely. If you look at the daily chart, you can see that when the market spends a lot of time in a range, it makes a big break away from that range. A lot of time in a range, big break away from that range. A lot of time in a range, big break away from that range. Okay? But tricky to know exactly when. Okay, poor high, numero dos. This is the third attempt of the market to break out of the chop zone. Watching those ticks. Jason says, did I get any tourism time? Yeah, we did. We did like a little bit in all the big cities along the way, like a little bit in Boston, a little bit in DC. Went to Busch Gardens in Williamsburg. Did some tourism in Seattle and San Francisco, but not a lot. Jason, yeah, that's right. We want to be able to walk to the beach and then walk along the beach holding hands, watching the sunset. Like a couple of cheesy magoobers. All right. Well, what do we think? Are we going to break to the upside? Liquidity is telling me they want to push it away again. They're adding more liquidity. See how it's getting darker and darker up here? As price is moving up into it, they're trying to scare it away. But we might be able to poke through. Scooball says a lot of stops so close. Yeah, I mean, you would think at this point they should at least be able to poke up there. They got all the stops from the sellers in the A and B period waiting. Of course, we're waiting for the poke and support. But they should be able to break through. There it is. All right. So we repaired the poor high, significantly increasing the odds that we will repair the poor high from yesterday at 55.39. The market is now one time framing higher, which is bullish to see. I would not be willing to long it unless it came back to 35 once again and held as support, right? Because they may just be coming up for those stops and then they come back down. If it holds as support, I will be very bullish going forward. Let's see what happens. All right, that is the third look above and fail of the overnight high so far today. This is just the choppiest of chop. So the market is still one time framing higher. The higher probability is still that we will head up and test 55.40. But if they break below the halfback now, we will get a liquidation and come back down through the opening price. I talked about this beforehand. So far this morning, they tried to get above the overnight high in the A period and they didn't have it, but they found support. Buyers stepped in. They came back for it again in the B period, didn't have it. Market came back down. Buyers stepped in. They took another poke at it in the C period. Now it's pulling back down. Are buyers really going to keep stepping back in? They're getting nothing for it. They can't even get above yesterday's high. So each time that it does this, each time that it looks above and fails, looks above and fails, looks above and fails, we are getting less and less buyers each time willing to step in and take risk. So they pretty much, I would call cessation of the trend the halfback at this point. If they get back below there, they're liquidating. So the buyers truly must defend. Or we may spend the whole day today inside yesterday's rage and just keep returning to 55.30 again and again and again. John says, look above and fail. Scooball says, told you, super pinned. Nap says, liquidation time. John says, drop it. Nap says, dang it, saved again. Yeah, it's just pinned, guys. It just can't go anywhere. It can't break higher. It can't liquidate lower. It just cannot go anywhere. We will still think about it as one time framing, meaning that in the end, the highest probability is that it gets to 55.40 until we get below half back. As long as the buyers keep buying, they should be able to get to yesterday's high. What happens after that? Well, who knows? Bryce says market makers are already on vacation in the Hamptons. I mean, whatever mechanism is at play right now was at play all week last week as well. This is just more of that. All right. Well, the C period. I mean, this is just, guys, this is the most exciting live stream in the history of the world. The C period just made a poor high. So now, as long as the market continues to one time frame, we should poke through 42. Or, sorry, poke through 40. Yay! We did it. It only took 4 hours. We finally did it. Okay. So the one time framing continues here in the D period. We also now have some new information to work with in the market because we now have higher highs and higher lows on a daily time frame than yesterday. So that increases the odds that yesterday was a look below and fail of that larger balance area. Okay, so we've got the big balance area that we had from all of last week. We look below it and fail. The highest probability is that we are going to head up to the opposite end of balance. Now, obviously, I'm not saying we have to do that today, but in the days ahead, there is now a higher probability that the market is going to continue working its way up towards those all-time highs rather than break out to the downside and come back to repair those gaps that we left behind. Okay, so if you remember this morning at the start of the day, that's what I talked about. We've got balance. We got a weak high, and we've got gaps that need to fill. So the question is, which of those is it going to go for? Well, now the higher probability is that it's going to go for the all-time high. Okay. Do I think it's going to happen today? No. I definitely 100% think we're still pinned to 55.30. So I think whenever we get cessation of the trend, we're coming right back down to there again. But as long as it's one time framing, it can continue to head higher. And I think in the days ahead, we're going to start grinding our way back up. That is because we made higher highs and higher lows on the daily, and we have value overlapping to higher. So we have some momentum, as little as it may be, to the upside. Nap says short covering time. Laugh out loud. Yeah, no. See, we're not going to get this market is still definitely pinned. So we're not going to get anything emotional whatsoever. It's just the market mechanism is at play right now to stop that from happening. If you just look at the icebergs and the stops, every time they take out a big wave of stops, they instantly smash it with an iceberg down. Big wave of stops, smash it with an iceberg down. Just now, stops, iceberg. So they don't want this thing to run anywhere today. But for now, they have the momentum up. They can keep it going. Obviously, if you're looking to long, you want to be doing it at the lower end of the range, not chasing price up here, because it's going to keep on grinding. It is also worth noting we've had this giant node of liquidity here since yesterday around 55.42. If the market is able to push through it, looking at what happens to the liquidity from there will be very, very interesting, because either we flip the order book. So basically the market pushes through that liquidity and then that starts to become support, right? It becomes liquidity below the market, which would be bullish for continuation. Oh, it's happening as we speak. or we push through and then the liquidity all disappears. If we push through and the liquidity all disappears, it's probably coming right back down. If we flip the order book and we turn what is now resistance into support, that is bullish for continuation higher. And the one-time framing continues in the E period. Okay, so here's that moment. We just finally poked through that liquidity. So now do we flip the order books? Do we turn this area into support? Does liquidity start to pile in underneath price? Or does it just kind of pull its way right back down? Let's see what happens. Okay, so the liquidity did not flip. They did not flip the order book. That is less bullish to see. However, the market is still one time framing higher. So the bulls are still in control. I see potential support around 55.38. So if we get a bounce there, I would look for it to head back up to test the high again. Or at the overnight high, 55.35.25. Looking for a bounce there as well. If the market can bounce at either of those levels, the market can just keep one time framing higher, even if it's a slow melt to the upside. If the market gets cessation of the trend, if it pulls back down below 32, then the momentum is over. Okay? So now it's just a matter of seeing how far they can push it. Okay, so right as we get to the end of the E period, they are pulling it down to the D period low. As weird as this is going to sound, that is actually bullish to see. Okay, because if this momentum is going to continue to the upside, they got to stay above the E low in the F. So if they poke below the E low now in the F period in 1 minute, we'll know the momentum is over. We'll look for the market to just trade rotational. Here we go for the rest of the day. If they can hold, they can continue the momentum higher. So this gives us a good area if we wanted to go long, to look for trades where we're taking on very little risk with a much larger potential reward. Or if we wanted to go short, to wait for that, for cessation. There it is. So that is cessation of the trend, increasing the odds the momentum is over, and that high will be the high of the day. So the market is pinned. Dun, 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 dun. So yeah, what I'm suspecting now is we drift back down to 53.30, and then we just kind of go sideways the rest of the day. As I said, it is bullish on a daily context. We made higher highs, higher lows, and brought value overlapping to higher. Combine that with the look below and fail of the balance area. I think in the days to come, the market wants to continue to drift higher, but it looks like we just made a high of the day for today. So it's sideways from here. The market is rotational. Act accordingly. Any final questions for me before I say goodbye for the day? Anything at all? Speak now or hold your peace until tomorrow morning. As far as support levels to the downside, I would be very cautious buying below value. So those of you that know, normally when the market is rotational, I love to buy down here below value, looking for a rotation back up to the point of control. I would be much more cautious today because we have a weak low, a low volume low from this morning. And because of the way the market traded today, the way it immediately pushed higher and then it continued to melt higher and melt higher and melt higher, there is a chance that down here below value, we get a liquidation and we poke below the A period low. So I'm not saying I wouldn't trade rotation, but I would just need to be absolutely certain that I'm seeing support there before I'd go long for that rotation back up. However, if we got a look below and fail of the opening price, so if the market poked down here to say 55.11, turned around and came back up through, that is an excellent place to go long for rotation back up. Okay? But I suspect it's going to get even more boring from here. I think today is going to look a lot like this day, or this day, or this day, or this day. Tony says, you're back for the half day tomorrow. Yes, I will be here tomorrow morning for the brigade. Not on Thursday, though, obviously. And we'll see what happens. I have a feeling it's going to be boring. As I said this morning in that tweet, you know, sometimes when you have a scenario like this where everyone's expecting for the market to go nowhere because of the holiday, sometimes you get a crazy move, you know, a day before the break starts. So there was a chance we could have made a huge move today. We could have had a day like this where the market could have tried to break away and come back or try to break higher or whatever. But the fact that it didn't, the fact that we've still remained pinned today is a sign we're probably going to remain pinned until Monday. So not going to be a very exciting week. But ours is not to reason why. Ours is but to trade. Thank you very much, and we will see you tomorrow morning. Oh, a couple more questions here. Mackie Mac says, lower low on the ES today. It is possible. Yes, as I said, that I could see a scenario play out. Oh, not a lower low. No. But I could see us poke below the current low. I could see a little dip down there that then comes right back up. But I don't think we're going to make a lower low today. No, sir. I think we are stuck inside yesterday's range. And we're going nowhere. All right. Thanks a lot, guys. Bye-bye.